Hello dear students, there is another important topic which you must learn to treat, that is the goodwill. All the partners, including the partner who is retiring, have worked very hard for the last many years. Now that one of them is retiring, the retiring partner deserves to be compensated for goodwill, which he has also helped in building up. How this is to be treated is the topic of today. The goodwill is that power in a business which attracts the customers. And once the customers start coming, the business of the firm progresses, starts earning more and more profits, thereby helping all the partners to share good profits. Now that one of them is retiring, he is entitled to his share of goodwill before he leaves. So we have to study how this should be done. My dear students, before you start dealing with this, you must study the balance sheet of the old firm before retirement. Please find out whether there is goodwill in the old balance sheet or not. If there is goodwill in the old balance sheet, please pass one journal entry and write it off. Finish this goodwill. This goodwill will be written off by passing one journal entry, that will be old partners accounts debit in old ratio. Find it. Old partners accounts debit in old ratio to goodwill. Being old goodwill written off. This entry is to be passed first of all, only then you start doing else. This will take away the goodwill from the balance sheet, and the balance sheet is now free of goodwill. This must be done, and if you do not do this, your answer may be wrong. There are other methods also, but I am going to take only one, which is the simplest one, that the old goodwill must be written off before you start doing anything else. So that being done, now the next thing is, First was the balance sheet has got the old goodwill in the balance sheet. What is to be done? Write it off. The rule is write it off. And this is how it will be written off. Old partners accounts debit in old ratio to goodwill account, being old goodwill written off. After this, if goodwill is not given in the balance sheet, then what is to be done? That is the next thing. Find out what is the total goodwill of the firm. Find out A. Find out the value of goodwill of the firm. Goodwill of the firm. B. Calculate retiring partner's share. Calculate retiring partner's share. This share, his share, will be paid to the this share will be paid to the retiring partner. Find out the total value of the goodwill of the firm. If it is given, it is fine. If it is to calculate as indicated in the question, and then find out what is the share of the retiring partner. Whatever his share, if it is 1/6 of the total goodwill, 1/5 of the total goodwill, 2/3 of the total goodwill, you will find out the share of it. Once this is done, then there is another rule. That rule is that the retiring partner is leaving his share in the business. He is going away. He was a partner. He was sharing profits. Now once he leaves the business, he will no longer share the profits. So he leaves his share behind. That means he is sacrificing his share. That means he is losing the share. For whom? For the continuing partners. Those partners who are going to continue, they will get his share also. That means those continuing partners are the gaining partners, and the one who leaves the business is the losing partner. So therefore, the rule is, golden rule is, the gaining partners must compensate the losing partner. The gaining partners, the rule is, gaining partners or gainers must compensate the losers. Compensate the losers. Those who lose, they should be compensated by the gainers. Who is the loser? Retiring partner. Retiring partner is a loser, and the continuing partners are gainers. And in which ratio they will compensate? They will compensate in the gaining ratio. We have already studied how to calculate the gaining ratio. Once you know the gaining ratio and you know the share of the retiring partner, this is very simple. Give the share of the partner to the retiring partner, and let this be debited to the continuing partner in the gaining ratio. Therefore, this is to be done in 5 possible cases which I have listed here. These 5 cases are: A, B, C are 3 partners with this ratio. A retires. He is losing his share 5/10, and B and C are continuing. This share goes to B and C. They are the gainers. Therefore, these gainers will compensate A. Second case, again similar one. A, B, C, 5/3/2, A retires, and now the new ratio is given. New ratio, once A goes, B and C remain. B and C are 1:1, they are equal. Now they are the again gainers. So gainers will compensate the losers. How are we going to treat these cases? I am going to explain here with the help of examples. So you will be given the goodwill of the firm. You will be given the goodwill of the firm. I take case number 1. I write here that the goodwill of the firm is, say, rupees 2 lakhs. Goodwill of the firm is rupees 2 lakhs. And in this case, A retires. And what is A's share? In first case, A, B, C, their share is 5:3:2. A retires, A's share is 5/10. So what is A's share of goodwill? A's share of goodwill is equal to 2 lakhs multiplied by 5/10. That means this is equal to 1 lakh. equal to 1 lakh. This is A's share of goodwill. This has to be given to A because he is losing his share. Now, who are the gainers? Gainers are B and C. Let us find out what is the gaining ratio. And you know, when we calculate the new ratio like A, B, C, the ratio is 5, 3, 2. What is the new ratio? A goes, leave him. So, new ratio is this. When we calculate new ratio like this, then the gaining ratio is also the same, 3:2. You can work out, you can calculate, but whenever you calculate new ratio like this, if A goes, new ratio is 3:2, gaining will be 3:2. If B goes, new ratio is 5:2. Between A and C, gaining also will be 5:2 between A and C. If C goes, new ratio between A and B, 5:3, and gaining ratio also will be 5:3. This is the simplest case and it should be practiced like this. Okay, you need not calculate the gaining ratio like deducting the new ratio minus old ratio. Deducting old ratio out of the new ratio, you don't have to do like this in this case. So, the gaining ratio is this. Now, how to treat this? We will pass a journal entry for this and journal will be made like this. We have to rule journal properly like this, and we have to pass entries in this journal. Right here, journal and particulars, debit amount and credit amount. So, in here the retiring partner is A. He is to be compensated by B and C. We will say B debit, we will say C debit, and sufferer is A. He will be credited. Because B and C the gainers compensate the loser. A is the loser, B and C are the gainers. Gainers in the ratio of 3:2. This is their gaining ratio. They will be debited in this gaining ratio and C will be given 1 lakh of goodwill, his share of goodwill in the ratio of 3:2. This comes to 60,000 and 40,000. This entry will be passed and narration will be written here being A's share of goodwill, A's share of goodwill A share of goodwill debited to B and C in gaining ratio. Don't forget to mention here, please. This is the entry and you have to pass it like this. I repeat, B debit, C debit to A. A is the retiring partner and this is to be in gaining ratio. This is the treatment in the first case. If A retires, gaining ratio is 3:2. If B retires, gaining ratio is 5:2. C retires, then gaining ratio is 5:3. And the retiring partner's share, whatever it is, in this case, A's share is 5/10. It is 1 lakh. If B goes, then B's share is 3/10. It will not be 1 lakh, it will be 60,000. If C goes, his share is 2/10. It will be 2/10 of 40,000. So whatever the share will be shared by the continuing partners. Continuing partners will be debited in gaining ratio. Okay, this is the first case, that is this one. Now we take the other one. Second one is little different from the first. That is, in case the new ratio is given. Old ratio is 5:3:2 and the new ratio is equal. We have here goodwill of the firm is given and we are given new ratio also. So, new ratio minus old ratio is the gaining ratio. In this year, we have A, B, C, A retires, and we have the new ratio of B and C, B and C equal 1/2, 1/2. This is the new ratio. And their old ratio of B and C 3/10 and 2/10. 3/10 and 2/10. So therefore, the gaining ratio will be, this is 10, it is 5 minus 3, it is 2/10, and in this case it is 10, it is 5 minus 2 equal to 3/10. So the gaining ratio is 2:3. The gaining ratio is B to C 2/3. This is the gaining ratio. Now, if the goodwill continues to be the same, 2 lakhs, goodwill is 2 lakhs, suppose goodwill is 2 lakhs, B and C, they will share the retiring partner's share. Who is retiring? A retires, and A's share is 5/10. So 5/10, once again A's share is how much? 1 lakh. So A's share is 1 lakh. This 1 lakh will be given to A, and B and C will share this in the ratio of 2:3. 2:3 will be 40,000 and 60,000. So again a journal entry will be passed in the same way, very nicely. After ruling the journal properly, the continuing partners are B and C, so it is B debit, C debit to A. A gets his 1 lakh, and it will be 40,000, ratio is gaining ratio, and 60,000. C gained 3, A gained 2, so it is in this ratio that B will be debited, because B gained 2/5, C gained 3/5, so it is 40 and 60,000. Narration the same, being A's share of goodwill, debited to B and C in gaining ratio. B and C in gaining. This is the journal entry. This is the treatment for goodwill when the new ratio is given. Now, after this, I come to a specific case, special case, that is case number 3. This is a typical case, my dear students. Try to see here. Generally what happens, the retiring partner is a loser partner. He loses his share and leaves his share in the business, and the continuing partners are gainers. But some rare cases, something else also happens. very rare, but it is a possibility, and you have to learn how to treat goodwill if this is the case. In this case, we have three partners, let us say A, B and C, and they are sharing in this ratio 60 paisas, 30 paisas and 10 paisas. So this is their ratio. And say A retires. A retires and his 60 paisas are going to C. So how much A suffers? 60. A suffers 60s. And B also gives 10 paisas to C. B also suffers 10 paisas. So now what is C's share? C's share is 80 paisa and B's share is 20 paisas. So this may be the new ratio. Now in this case what happens? A is leaving his 60%. A is a loser. A is a loser. B also is a loser. How much? 10. A is losing 60. B is gaining how much? C is gaining how much? 70. Now rule is the same. The gainer must compensate the losers. How much is he gaining? 70. How much is A losing? 60. How much is B losing? 10. So A and B both will be credited because they are losers, and the entire debit will go to C. This is the case in here. Now see what happened. This is just an example to explain to you. See actually how to treat there. This is the case where A, B, C are three partners, 3 to 1 is their ratio, and in here B retires and the new ratio is